Assets under management of the mutual fund industry stood at 24.8 lakh crore in April, up 4% month on month as per AMFI data. While equity mutual fund inflows declined in April, investments through SIPs stood at an all-time high. Let's do a three-point analysis of where's the money going in mutual funds and what's the outlook. 1. How were the mutual fund flows in April? Well, mutual funds saw a total investment of over 1 lakh crore in April, mainly driven by large inflows into liquid and money market funds, while flows into equity funds moderated. Exchange traded funds saw capital outflows though. Now, liquid and money market funds saw inflows of 96,000 crores in April, after an outflow of over 51,000 crores in March. Inflows into equity funds, including ELSS, fell to about 4,200 crores in April. Moderation was well anticipated as March, being the last month of the financial year, saw large flows into tax saving schemes. The spike in equity funds in March came on the back of improved risk appetite on expectations of a stable political mandate in national elections. However, as we get closer to the poll outcome on May 23rd, investors are developing cold feet and staying on the sidelines as of now. 2. Is SIP still a bright spot? Well, it sure is. While overall equity flows have been erratic, investment in equity funds through SIPs came as a silver lining, with about 8,200 crores in April, which is an all-time high. The rising clout of SIPs has been key to the success story of the mutual fund industry. If the current monthly SIP run rate at 8,000 crores is maintained, the mutual fund industry is expected to see equity inflows of nearly 1 lakh crore rupees in FY20, which is sizable by any standards. 3. What's the outlook on mutual fund flows now? Monthly equity inflows have come off significantly from the highs seen in November of 20,000 crores and above. The underlying trend is very encouraging as SIP inflows are still resilient. Now, thanks to strong equity mutual fund inflows in FY19, equity markets could endure the lackluster participation of foreign portfolio investors. Now, the moot question is, will this strong domestic equity inflows sustain if the market weakness happens in the coming months? And while there is no clear answer to this, but we are definitely enthused by the fact that the current flows are still strong and holding up well. Now, market reforms introduced by SEBI, such as reduction of total expense ratio and introduction of direct plans, have attracted retail investors, and therefore positive momentum is expected to be sustained.